You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo.
Hey, what's up, Market Moose? Mike from the Moose on the Loose. I know. I'm sorry about Tuesday and Wednesday. I couldn't speak right. Got caught up with a bad cold, and I got like one episode recorded on Monday, but then even on Monday and Tuesday I did not even work, so that's gonna to give you an idea of like how I felt this week. But now I'm back. My voice is not there, but my mind is bright and early now. So we're gonna be able to talk about Granite, Magna, and Tariffs. And I just have to say up like a quick pause. Today is Thursday. I'm great that I feel a lot better because tonight is the night. Canada versus USA. It's going to be an amazing hockey game. Even if you don't follow hockey, I think you should watch this game. It's going to be quite entertaining. So that's all I had to say about that. But I'm very happy to see a rematch there. Both teams are amazing, and it's just like candies for the eyes. Hopefully, they're not going to have like stage battle, but that's another story. All right. Talking about story and battles, a lot of like uncertainties with this commercial war. Are we going to have tariffs or not, or how much, or maybe, or like is it temporary or not? I mean, so far the overall sentiment from the market, in my perspective, is the market doesn't make it like a big thing. Like some investors are scared. I get that, and like I see like a lot of investors starting to panic a little bit more. But when you look at the overall market, there's not much that has moved, right? Either on the Keen side or on the US side. So I think that most of the market just think, well, those are like a lot of noise. We're not going to take action right now. It may or may not happen, may or may not have an impact. And I think it's the best way to approach this as an investor as well. I mean, on my side, I did not do any specific moves regarding the potential tariffs since the beginning of the year. And ironically, I had a webinar yesterday for my DSR members, and we had like 2 slides talking about how to tariff proof your portfolio and what to do and so on. But like one of the best key is just stick to your strategy, right? And that brings me to talk about a potential toxic cocktail, which is Granite. Granite REIT. I've been talking about this one on the show for a few times. I hold a stock, quite frustrating because the numbers are great, and we're going to talk even more about the numbers today. But the stock doesn't get any love. And on top of that, well, Tariff has a pretty high chance of hitting car makers. And Magna International is the 5th largest world auto part maker. One of the largest in North America, has like strong bonds with all the big US guys. And definitely will be subject to tariffs on a lot of parts that they're making. So just to give you a quick overview, the relationship between Granite and Magna International actually started in 2011, I think, when Magna International spun off Granite. Around those years. In 2012, 93% of the business from Granite was coming from Magna International. So it was really Magna International spinning off all its retail, its real estate properties into a rate, trying to unlock some value, and Granite since then tried to, became like autonomous and be well aware of that major business threat, a business flaw. And today it's only 27% of their revenue coming from Magna International. Still a large exposure, but every year they're trying to make acquisition, make new development that has nothing to do with Magna, just to make sure that they're more diversified. So yes, if anything happens to Magna International, it is going to have a huge impact on Granite. Even at 27%, it is huge. As a good comparable, you can think of medical Properties Trust, MPW. That was a very good REIT in the U.S. until its major tenant Steward went bankrupt, and Steward was like 32% of its business, of its revenue, and I mean the rest is history. The company had to cut, like the REIT had to cut its dividend. The stock crumbled because of those problems. Now, when I look at Magna International, I of course the stock is not doing that well. There's a lot of uncertainties about that. I sold my shares of Magna International last summer, mostly because they failed to report steady revenue and earnings per share growth. They had like a problem with margin from time to time. It's hard to make those manufacturing plants to work at full capacity all the time to actually realize those economies of scales, and those are the reason. Because they were not able to report constant numbers one after the other, I decided to move on. Now though, Magna International has a lot of manufacturers in the US, and that's the whole point of imposing tariffs. So if there are tariffs, what's going to happen? And I did a whole newsletter for my DSR members explaining that. It's to bring more business in the US. Is it going to work or not? Is it a good idea or not? Well, that was developed in the newsletter. But overall, Magna International already has foot in the US, so it's not going to be that hard for them to move production and avoid a part of those tariffs as well. It's probably like pretty much the playbook for all companies over there. When you look at Granite, it's also the same thing. Only 17% of its revenue is coming from Canada. So 50% is coming from the US, and the rest is coming from European countries. So Granite is relatively sheltered against those tariffs, mostly because half of their properties are in the US. One thing that could hurt is the 72% of their portfolio value of their properties are actually invested in distribution and e-commerce companies. So not related to Magna, but that's 70% of properties. I mean, if there are like some distribution center, I'm thinking of like Amazon closing their distribution centers in Quebec, for example. That was a big news in my province. I don't know if those were related to Magna International or not, but that could hurt. Not Magna, sorry, but Granite. That could hurt the REITs short term. However, when I look at the numbers, I'm not that worried. I'm going to explain you why. On average, the lease is almost 6 years. So when you look at all the portfolio properties, it's 5.9 years on average, the lease that we have right now at Granite. So if you want to break a lease for 6 years, wow, it's going to cost you a lot. And then Granite can move around and find another tenant to occupy those properties. Those are in high demand. Mostly if you look at the occupancy rate. So occupancy rate is at 94.7%. So 95% of their properties are leased right now with an average lease of almost 6 years. So what it tells me is if you want to break your lease, fine, you're going to pay the breakup fee. That's going to be additional revenue for Granite, and then it's going to create a buffer and create enough time for Granite to turn around and to find another tenant. I'm confident they will find another tenant because they have 95% occupancy rate. So it means that a lot of tenants are looking for those properties as well. One other thing that is really interesting here is when you dig a little bit deeper and you want to see, okay, so what's going to be the short-term impact on Granite in terms of leases? Well, only 3.8% of their revenue are coming up of their revenue in terms of lease. They're coming up to maturity in 2025, mostly in the US. So when you're thinking about tariffs should bring more business like locally in the US to be established, I don't think that 3.8% of leases is actually in danger. It's probably quite the opposite. So not much is going to change, especially for 3.8% of the entire business. Not really worried about that. And then if you look at 2026, it's 8.8%. So a lot bigger, but again, mostly in the US once again. So the short-term view for Granite, everything is still the same. I'm still having a hard time to know why the market is not giving much love to this great company, because the FFO per unit keeps on increasing, the FFO keeps on increasing, the revenue keeps on increasing, the dividend, the distribution keeps on increasing. But yeah, you're not getting much love, and that kind of sucks. But I mean, it's part of like being patient, right? So I'm not gonna like give away on this one. I'm gonna keep my shares for a while. As long as the numbers back my investment thesis, I don't really care about what's going on in the stock market. And in terms of the tariff, I don't see this as a major threat at this point. Again, we'll need to wait until we have like real numbers and real dates, because so far we have a lot of what ifs, a lot of different scenarios, but we don't have much tangible intel that you can take action. And I think it's pretty much part of the playbook here, is just to create chaos, create a lot of noise, and see how people react and how they can actually maybe take steps that would have not been taken if the chaos was not created. And I think this is how it goes right now with Mr. Trump. So, all right, Moose, my voice is already killing me, but I hope that you have enjoyed this one. If you enjoyed the show, please take 2 seconds to give me a 5-star rating on either Shopify or on Apple Podcasts. This is my only way to actually grow the podcast and make sure a lot more people listen to the Moose on the Loose. So I thank you so much for being there with me all the time. We're going to talk again tomorrow for sure. And until then, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to the Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.